So as many of you are looking to grow your businesses and eventually, to exit, to sell, I thought I'd talk about valuation from a couple of different perspectives. An easy starting point would be valuation and scale. So how big do you have to get in order to command a premium valuation or to command the kind of valuation that you're hoping for? Let's just call that, simple round numbers, 10x revenue. So what does it take? What kind of scale company do you need to be able to hope to get that? And I'll just call out some different inflection points, and then why do those inflection points exist? And so if we make, a graph of a company, sort of from a revenue perspective, a little bit sloppy, but let's say we start out here, and let's say that, we're growing, some sort of hockey stick type thing, right? Let me mark out a couple points here. So let's say that here we are at 1 million in revenue, and then here we're at 5 million, and then somewhere up here we're at 10, right? And well, the valuations actually, the multiples vary pretty widely between these points. Some of that might be for obvious reasons, but let me point some of them out. Some of them are not so obvious. When you're subscale, so when you're like down here in this area, between 0 and 1 million, and there's a very high risk of the company simply not continuing to exist. There's a sort of like a lot of, and when I say the company, well, from a buyer's perspective, they know that they would ensure the product's continued existence, but they don't know if the traction, like how real is that traction? How much longevity does that product have in the market, product or service? Does it really have in the market? And so that's why you see really low valuations, in this range. This is what I would call acquire.com territory. So here and actually acquire.com is not a bad place to try to sell a business that is that small. You don't have that many options. Acquire.com has emerged as a good one. But here we're talking about business valuations that are oftentimes 1x revenue or less. In fact, you'll see a lot of valuations here which are based on a very low multiple of EBITDA, or basically pre-tax profits. So that's what you are at that level, and the reasons for that would be that from a buyer's perspective, they've still got to do a lot of the hard work. Maybe there's some promise in that business, but the hard work is ahead of them. They're not guaranteed success at all coming in at that stage. And so your valuations, could be, I'll just say 1x, maybe 2x rev. That's what you're looking at there. And honestly, the low end is probably more likely. And it could even go below 1x rev, depending on the nature of the business and how much potential profitability there is. As we go up the scale, as you get toward 5 million, valuations actually accelerate quite a bit. So there's this second space, let's just say in between 1 and 5. So in between 1 and 5, that really is, the kind of M&A deal that there are boutique firms that will specialize in trying to sell, in particular software companies or potentially high growth companies in this range. And in here, you might be anywhere from, let's say, 2x to 6x rev. Obviously, a lot of variables dictating where in that range you might be. But, the midpoint of that being somewhere around 4x rev is not uncommon. Why does it matter for you to get here? I mean, you're past $1 million in revenue, you've got some traction. So why does it matter so much that you get bigger than that before you really start to be able to tap into higher valuations? And the answer is that let's say you're generating $3 million in revenue. If you're generating $3 million in revenue, there are quite a few, I'd say duos, or actually, honestly, even single, top shelf or, top of their career attorneys in like New York or in the Bay Area that are turning that much top line revenue, meaning their own billable rates, that they're capable of turning that much revenue. And so what you have here from an acquirer's perspective is you have the risk of the superstar effect. What if I buy this company and it's doing $3 million in revenue, but then the moment the founders walk away, it's gone. It's poof, nothing. So are they buying a real scalable business? or are they simply buying the capabilities of the founder? And since the founder is not permanently with the business post exit, is that going to simply walk out the door? So that becomes the risk. It's almost more like, you can imagine, everybody's heard of like amazing podcast deals, but would you buy the Joe Rogan experience? Would you license that without Joe Rogan? Obviously not. There's no value in it without him. And so that's where the risk is in this size business, is that it's really tied to the founders personally, and it's not yet truly a scalable business, even though a lot of progress has been made. So then you get into this realm, and up here, up at, and maybe it's just because as humans we prefer these round numbers. There's nothing magical about 5 and 10 except for how many digits we have. But up here is when you can achieve, and I'll put a broad range on it, 6 to 10x rev multiples for the right business, which is growing at the right velocity, which maybe can show signs of terminal profitability being at great rates. All those things are possible. 6 to 10x, honestly, even more could be possible in the best case. But that really starts to happen when you get up here. Can you get here, maybe somewhere along the way, maybe somewhere right there, somewhere right there? Yeah, you can. Once you get past 5 million, you get past this sort of question of superstar effects, and buyers can see that, okay, this is a real legitimate business. Then it's going to depend on other factors, like what is your actual growth rate? What is your profitability? All of those are going to figure into, where in this range, you end up in. But the larger you get, and certainly once you get up to 10 million and then beyond, then there's not a question anymore. This is a real business. It has proven a certain amount of scalability. The question in the buyer's mind then becomes, okay, how much further can I take it? What is the total addressable market? What is the synergy with whatever I'm currently selling, if I'm a strategic buyer? All of those kinds of questions come up, and that'll help, determine where you get into this range and beyond. But again, that's one of the reasons you want to get there, because you've proven that you are a real scalable business that is de-risked in terms of product. That's like what you don't know when you're down here. And it's de-risked in terms of founders. It's not just like the founders alone. So you've de-risked all of those components. And that's why you get to these, the stellar valuations as you get closer to and then up and beyond 10 million in ARR.